Equity Mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast where we help you learn to invest in 45 minutes or less. We break down the world of investing from beginning to dividend so that you can hopefully make some returns. My name's Bryce, and as always, I'm joined by my equity buddy, Ren. How's it going, bro?
I'm very good, Bryce. A bit nervous for this episode, if I'm honest.
Yeah, I am very much looking forward to it. So we're carrying on from our 2020 bold prediction episode, and as we always do each year, we like to choose a stock of the year, pit it against each other,
Yes.
see who comes out on top.
Which has been a very one-sided contest the last 2 years.
It has been. I've been lucky enough to take out the top prize. 50-50 chance.
Yes.
However, this year, Ren, you would remember that I think the very last bold prediction for me was that this is your year for stock of the year. I'm trying to throw the heat on you.
Yeah.
I feel like you've done a lot more due diilligence and work this year than I have when it comes to choosing stock of the year.
No, let's not jinx it.
Yeah, still throwing heat at you. Before we crack into it, we did ask our listeners on our Facebook group or our discussion page to give us some of their 2020 bold predictions, and we ran out of time when we were doing our episodes, so we thought we'd just give a shout out to a few of the ones that have come in from some of our listeners. It's good to see that a few of them are thinking along the lines that we are as well, and I guess along the lines of Andrew Brown, who we will be releasing next episode. So keep your ears tuned for that one. But Ren, do you want to run through a couple that have come in from our listeners?
Yeah, so I think one that I particularly liked is the FTSE, so the UK stock market, to outperform the ASX.
Yes.
So casting aside Brexit concerns and barreling forward was Nick's prediction.
Yes, so Thanks, Nick. We'll check in with you as the year goes on.
And then one other one, which I feel may be more hopeful than predictive from one of our listeners, is that, and I quote, Australian property will crash, utterly screwing all of the boomers about to retire. There's a little bit of emotion in that one. So, Ben, we're not going to say we hope you get your wish because it'll hurt a lot of people, but we can tell you really want it.
Yes. Yeah. Nice one from Ben. He sent in a couple of others that we can check in on as well. Oil and precious metals to the moon. And the stock market will take a hit in February or March as predicted by the inverted yield curve a couple of months ago. Very keen to keep an eye on that one. So thanks to Ben. Eric sent in one. There will only be one cut to the cash rate. I'm not sure if that's Australia or America. I'm going to be assuming Australia. So Eric will check in with you on that. And I think that one that's coming from Simon is alternative drugs will become more mainstream in medicine. So I think we'll have to keep an eye on that one, I guess, through legalization or what we're seeing in the news. So
alternative drugs.
Yeah,
is that kind of stuff that you take?
What, like tea leaves? Come on, mate.
Herbal medicine?
No, I think he's referring to mushrooms and the like.
Ah, okay. Yeah.
So we'll see.
Nice.
So there's some predictions that have come in from our audience, but let's move on to our stock of the year. And do you want to go first or shall I? As the reigning premier.
you can choose the order.
I'm going for a three-peat here.
You are.
And just like my other years, I haven't really put too much, I guess, due diligence into this. I'm going with a gut feel here. And I picked this one up as we were going through the many stock predictions and picks that have come through from sort of December through to Jan. And we've been putting a lot of them in our feeds.
So you've stolen yours.
Hey, there's nothing wrong with copycats in this business.
No, that's true. No points for originality.
No points for originality. I've done well over the past few years in retail, and I know retail is doing it hard, but I'm going to be choosing a stock called City Chic, ASX code CCX.
Okay.
Now, Ren, City Chic are a plus-size women's apparel retailer in Australia, and they have quite a good niche market, I guess. They filled a gap a couple of years ago and have been doing very well. But the reason that I have chosen them is because of, just like I liked Afterpay, continue to like Afterpay this year, is they're expanding into the US. So absolutely increasing the market potential. And they have also made an acquisition into a company called Avenue, which will help grow, obviously, their earnings. So I am backing in retail. I'm backing their expansion into the US and hoping that they continue their strong form that we've seen over the last few years from a stock price point of view. So that's going to be my stock of the year, Reg.
Nice. So it looks like from the start of 2018, they're up about 2,000%.
Huge.
What happened?
Couldn't tell you.
Okay. We're not at the question and answer phase.
Let me put that as something to come back to next episode.
Okay.
But I'm backing the momentum that they've got.
So retail has had some tough times.
Yes.
I think with Jeans West going into receivership and then a bunch of Australian retailers announcing they were shutting stores, I think we've had over 200 shop fronts closed down in the last fortnight. So why do you think this retailer can buck the trend that's happened, especially in like that sort of fashion area of bricks and mortar retail?
Because they've got a stronghold on this segment of the market. And this segment of the market is one that needs to be met, if that makes sense. It's not, a lot of the retailers that are going out of fashion have a strong competition from substitute products, whereas CCX, it doesn't really have so much competition coming at it, if that makes sense. And yeah, I'm not saying that they are going to buck the retail trend. There's strong possibility that they are going to be hurt by what is happening in retail at the moment, but I'm backing them in to remain sort of the number one in this plus size women's apparel.
There you go.
See how we go.
Yeah.
Fingers crossed.
Cool. So do you have any other things
just
to
gut
say
feel.
about it?
It's just gut feel. It's gut feel, Reg. I'm fast and loose with this stuff.
Yeah, I can tell. And yet you're still going to beat me.
I'm going to throw it to you now because I feel like you've done a lot more due diligence with yours. So looking forward to seeing what you've come up with.
Okay, so my stock of the year is Atomos, ASX code AMS. Currently trading at $1.42. It's got a $265 million market cap and it was up about 120% over the last year. So it's already had a lot of growth. Not quite the 2,000% that City Chick has had.
And likely to see again.
The reason I'll tell you what the stock does and then I'll talk about why. So it designs and manufactures monitor recorders, which can be added to existing camera setups to make them high definition, better compression, more compatible with editing software, and can do things like extend the storage of the camera and stuff like that. They can be added to phones, tablets, or professional video equipment, and they're intended to simplify the process of editing and distributing video content. I think photos as well, but mainly video. So the reason I've chosen this stock, if we look from macro sort of perspective to start with, I think the internet and in particular social media is moving more and more towards video and especially towards amateur video. So we've briefly mentioned TikTok a few times on this show, but if you haven't downloaded it, it's worth downloading to understand the shift that's happening in social media. TikTok is primarily video based, had more downloads than Instagram last year, is a lot more popular with younger people, and is just kind of, I'm going to say raw, but it's just normal people a lot of the time, whereas Instagram has become very commercialized, very influencer and celebrity driven, and just overall kind of a shit experience. I think TikTok is fast coming up and will overtake Instagram at some point. And so with that focus on video, I think a company like Atomos, which creates add-ons for amateurs to create better video content, will really benefit, let alone the fact that, YouTube still is growing and all of their professional segment with the amount of content being created by Netflix, Disney Plus, all of that. But I'll get into that in a second. So between 2017 and 2022, video traffic is expected to, or has and is expected to continue growing at 33% year on year. And social media content creators, which is a loose term, I know, but it's up 23% year on year since 2012. And so if we start with that sort of segment of the market, that sort of amateur content creator, people who are trying to, I guess, create good quality content, high definition content, and then monetize that content, I think Atomos has a sort of cheaper range product that will help them do that. And then as you sort of go up the quality and expense scale, they recently acquired a company, Timecode, that is already working with Marvel Studios, Amazon Studios, and Walt Disney. So they're also trying to sort of capture a piece of the pie in all the content that's being created in that sort of end of the video content creation spectrum, I guess you could say. Any questions thus far?
Really interesting company. I have a couple of questions that you might address later on, so continue and we'll see where we get to.
So another selling point is that Atomos have strong relationships with camera manufacturers already, and they definitely like to talk about the fact that their founder and CEO met Steve Jobs in 2011 and there was a relationship there. But the result of that is that they've got strong relationships with companies that create editing software like Apple and Adobe. And then they've also got strong relationships with camera manufacturers, so Canon, Nikon, JVC, Kenwood, and Sony. And their relationship with Apple is so good that they're the only competitor in this field that have access to Apple's ProRes RAW, which apparently is the best editing software out there. So they've got some advantages over their competitors there. They're relatively small, so their revenue is about $50 million, and the addressable market's valued at $10 billion. So there's some run rate there.
I'm just looking at that. So that's the camera equipment market.
Yes.
Yeah.
It seems like they've got three major competitors: Blackmagic Design, Convergent Design, and Small HD. Now, look, I haven't done too much research into the difference between them all, but it does seem like their relationship with Apple to use this software gives them an advantage. And honestly, I think there's probably, as the whole addressable market grows, as more social media becomes video content, more of the overall internet traffic moves to video content, as well as more sort of professionally produced content is made for streaming services, I think the whole addressable market will grow. So that's sort of it. I guess the natural question that I had that came out of it is, why do you need this add-on? Why can't you just get a really good camera? And the flip side of that question is, will a camera manufacturer create a really good camera that just blows them all out of the water? And so they've tried to address this in their prospectus. And I haven't tested a lot of these claims, but they claim that even with a good camera, you have low recording time due to the file size. So the compression isn't very good. The camera is not designed for the editing software. So their add-on sort of creates that link directly with the editing software. And then when you're filming, you have a low resolution, small monitor. So adding their equipment on allows you to better monitor it as you're filming. So that, I guess, answers that question. Although, if you had better compression software and you designed it for the editing software and you had a better screen, potentially you could just design a better camera.
What's the demand to edit on the go, though? Because I disagree that this is for the TikTok style people. I think this doesn't look like it's a phone edition at the moment.
No, there is a phone edition.
Is there?
Yeah, I think it's called the Ninja.
It's $300 but
yeah. But if you think about what an Instagram influencer makes, and soon to be what a TikTok influencer makes, they get millions of likes per video. To answer your original question, what's the need to edit it on the go? I guess on that social media end of the spectrum is because they're pumping out 3 videos a day or whatever. But yeah, it's a good question.
What's it? Ninja. Okay.
Yeah, Ninja. And then the last note to do with their management. So they were founded in 2010 and the founder has remained the CEO from there. So that's always a good sign.
Does he own shares?
I haven't checked that. That is a good question. And that is probably something I would definitely check before buying it. And then the founder and CEO previously worked at Blackmagic, which is one of the major competitors. So it seems like he knows what he's doing. So yeah, that's
not bad.
What I've chosen. It's really just a big bet on TikTok.
Yeah. The Ninja's actually $695 USD. I can't find anywhere on here images showing it plugging into a phone. They do show in their product a sort of future plan that it can be plugged in phone. Everything at the moment is showing it being plugged into DSLR cameras. Quite an attachment. But hey, look, it's an Australian company.
Yeah, Australian company.
Recently
ASX
IPO'd,
listed.
Maybe last year by the look of it.
Yeah, that sounds about right.
Nice pick, Reg. How'd you find it?
It was one of the stocks on the list from our summer series that we didn't do.
Oh, nice.
Yeah.
Nice.
Yeah.
Should have done it.
Should have done it.
Yeah, it's a good one.
Well, we'll see if it's a good one.
Well, I mean, it's an interesting company that is addressing. I don't know if it's a problem, but it's addressing a market that I have never really thought about or been exposed to.
Yeah,
I'm struggling to see the everyday sort of TikTok user pick this up and put it on. It's not going to be them.
It's not going to be them. No, it's going to be.
Don't think it's going to be sports people because they've got like the GoPro sort of 7 or whatever it's up to now is equally as capable of doing 4K upload, that sort of stuff.
Yeah.
I'm just trying to think who the market will be in terms of like who's going to use this shit.
I think if you think about social media influencers now on Instagram, they
have people follow them around with big fat cameras
Yeah.
Okay.
But they're primarily doing still images, and so they're set up for that. I guess on the amateur end of the spectrum, there would be people with sort of 10 million followers, 5 million followers that have an opportunity to monetize their content, but the quality has to be good and they have to be consistently posting. So on that end of the spectrum, I would say that's the user of the cheaper products here. And then at the more expensive end of the spectrum, Netflix studios, Amazon studios, Walt Disney are already using this for their professional stuff. So it would be about growing that part of the market as well.
Yeah. I don't know enough about this sort of video stuff and compression and whatnot, but I know like the latest iPhone's got bloody damn good 4K and all that sort of stuff.
That's why you're not a TikTok influencer.
You love TikTok.
I reckon
you have a secret account on TikTok.
Yeah, at Equity Mates. No, I reckon the biggest risk is that someone just creates a better camera. I reckon that is the biggest risk to this company. Yeah.
I thought cameras were already very good.
Yeah,
so
but
obviously don't know enough.
It's you're not going to film a Netflix show on your iPhone.
No, you're not going to film a Netflix show with the Ninja V for $695.
True.
If these guys are winning over Hollywood and people are plugging this into those massive cameras, then there's something wrong.
No, there's photos of that.
What the hell? Why? Okay, interesting. Well, I'm keen. This is a good stock, Reg. So what's the price?
$1.42.
Nice.
Yes. Not profitable yet.
Okay.
EBITDA profitable, but I think they're probably getting to a point where they've spent a lot of money on building their distribution networks and stuff like that. So they're probably ready to really start monetizing.
And if you were the listener that suggested Atomos as the stock for us to do as part of our summer series, reach out to us and we'd love to hear your views on why you suggested it, and perhaps you can have a chat with Ren to help get him across the line this year.
Although I would be shorting it now that I've made it this stock of the year.
Hey, you've clearly done more due diligence and work than I have. I will make an effort to update everyone on City Chick with a few more details over the coming weeks. Nice, Reg. Well, is there anything else you'd like to add about Atomos or City Chick?
Oh, no, I'm just already second-guessing myself in a big way.
Why? Mate, who cares? We back ourselves in.
I really should have just gone, Woolworths and then been like, it'll sell off Endeavour Drinks, and then Woolworths plus Endeavour will do all right. That's my backup, all right?
On record.
Yeah. Telstra probably has, $1 or something in it, something safe.
Well, my backup is an inverted ETF for the Australian stock market, so leveraged. Nice, Reg. Well, exciting. So we've now officially got our 2020 stock of the year set in stone. We'll also get that up on our website along with our 2020 bold predictions so everyone can keep track.
Debatable about that.
We will.
Okay.
And we'll leave it there. Very exciting, and very much looking forward to kicking into gear for 2020 and getting out some great content that has been suggested by our listeners. So stay tuned for that, and we'll speak next week, Ren.
Sounds good.
Thanks for listening to Equity Mates Investing Podcast, a production of Equity Mates Media. Please remember that everything you hear in Equity Mates Investing Podcast is general advice only. The content has been prepared without knowing your personal objectives, specific financial circumstances, or goals. The hosted Equity Mates Investing Podcast may maintain positions in the companies discussed. Before considering any investment, please read the product disclosure statement and consider speaking to a licensed financial professional.